Imagine this. The greatest investor of all time, Warren Buffett, is selling off billions in Apple stock while doubling down on businesses most of Wall Street has written off. What does he see that others don't? Is it time to rethink your own investment strategy? In this video, we'll break down Buffett's latest moves, reveal the hidden logic behind his decisions, and uncover lessons you can apply to your portfolio today. Stick around, because these insights could be game-changing. Warren Buffett's investing decisions often seem like riddles wrapped in enigmas. Recently, he's been making bold moves, selling long-time winners like Apple and Bank of America, while snapping up shares in energy, satellite radio, and internet infrastructure. What's going on here? Today, we're diving deep into Buffett's portfolio to answer three key questions. 1. What is he selling and why? 2. What is he buying and why? 3. What does all of this mean for your investments? Let's start with what Buffett is letting go of and why. Selling the winners. Apple and Bank of America. First on the chopping block is Apple. Yes, that Apple. For years it's been one of Buffett's crown jewels, making up nearly 45% of Berkshire Hathaway's portfolio. So why sell now? Reason number 1, sky-high valuations. Apple's stock has been on an incredible run, leaving some analysts to call it overvalued. Buffett seems to be cashing in on those gains while the market is hot. Reason number 2, diversification. With such a large chunk of Berkshire's portfolio tied to one company, selling Apple reduces risk exposure. Think of it as rebalancing on a massive scale. Next up is Bank of America. Buffett has slowly trimmed his position in this financial giant. Why? Economic uncertainty. Unstable interest rates and economic pressures are squeezing margins in the financial sector. Even cash printing machines like Bank of America are feeling the heat. Strategic shifts. Buffett isn't bearish on banks, but he's reallocating funds to areas with more immediate potential. These sales aren't about panic. They're about repositioning resources where they can work harder. So, what's catching Buffett's eye right now? Buying undervalued gems. Occidental Petroleum, Sirius XM, and Verisign. While Buffett is trimming his exposure to tech and finance, he's ramping up investments in overlooked sectors. Here's what he's buying. Occidental Petroleum. Betting big on energy, Buffett's been snapping up shares of Occidental Petroleum, now owning a staggering 28% stake worth over $13 billion. Why energy and why now? Undervalued opportunity. Occidental's stock is down 25% year to date, making it a bargain with a price-to-earnings ratio of 10. Strong fundamentals. The company generated $4.8 billion in free cash flow over the past year, a key Buffett metric. Long-term play. Buffett isn't chasing oil prices. He's betting on energy's role in the global economy for decades to come. Sirius XM, a curveball with recurring revenue. Buffett's Berkshire recently added 5 million shares of Sirius XM, a satellite radio company that's had a tough year, with its stock down over 60%. What does Buffett see? Cash flow machine. Despite challenges, Sirius XM generated $1.3 billion in operating cash flow in the first 9 months of 2024. Niche dominance. Satellite radio might not be flashy, but it's a steady source of subscription-based income. Room to innovate. Buffett loves businesses that can adapt, and Sirius XM's position gives it space to evolve. Verisign, quietly profitable. Finally, Buffett has increased his stake in Verisign, a company managing domain name registrations and internet infrastructure. Here's why. High margins. Verisign boasts a 60% operating margin. Steady cash flow. It generated $730 million in free cash flow over the past year. Unnoticed. Stability. While tech stocks dominate headlines, Verisign quietly generates reliable income. The bigger picture. Buffett's strategy. Explained. Buffett's moves reveal two critical insights about his strategy. 1. He's selling overvalued assets. Apple and Bank of America are great companies, but even great companies can get too pricey. Selling them allows Buffett to lock in profits and minimize risk. 2. He's buying undervalued opportunities. Occidental, Sirius XM, and Verisign might not be market darlings, but they have strong fundamentals and long-term potential. What ties all these decisions together? Cash flow. Buffett prioritizes businesses that generate steady income, giving Berkshire Hathaway the flexibility to pounce on future opportunities. Lessons for everyday investors. So, how can you apply Buffett's strategy to your portfolio? 1. Focus on fundamentals. Don't chase the hottest stocks. Look for businesses with strong earnings, low debt, and a competitive edge. Be patient. Buffett's success isn't about timing the market. It's about time in the market. Invest with a long-term perspective. Diversify wisely. Don't put all your eggs in one basket. Spread your investments across sectors and asset classes to reduce risk. Keep cash on hand. Having cash ready allows you to seize opportunities when the market offers bargains. Ignore the noise. Focus on value, not trends. The market is full of distractions, but timeless principles always win. Buffett's recent moves may seem contradictory, but they're rooted in a clear strategy. Sell when prices are high, buy when value is low, and always play the long game. By understanding his decisions, you can gain valuable insights to refine your own investing approach. If you found this analysis helpful, don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss out on the latest insights. And now, I want to hear from you. What's your biggest takeaway from Buffett's moves? Let's discuss in the comments below.